I think I just realized one part. When I sit on that side and try to manage
Hello.
time, I push hard. When I'm sitting on this side, I'm enjoying the discussion, okay? So I think that's what it is. I'm just so surprised that we are off by that long, but hopefully the engagement continues and we will try to figure out what more. I'll straight away come to the topic of investment, and InsurTech investment is, my sense was that next year we should see almost $1 billion investment. I think it's a very strong statement I made, but I also believe that based on interactions we have with the ecosystem, it looks like possible. And interestingly, the group which we have is completely varying, right? You have a PE fund, you have Series A, an early stage, and of course a founder, which is crazy guy, right? So I think good segues to figure out. So Mahesh, from your perspective, maybe just you can put first thing first a perspective on insurance in India, and what do you see is going to happen from an investor perspective?
Yeah, thank you. Good evening, everyone. I know that this is, I think, the last session, so...
No, there is
Oh, there is?
more.
Okay,
there is
sorry.
more. So just to ensure that we know the next drill, we'll have a report launch happening just after that.
Okay.
And then we have a session which is for investors, for institutional brokers, and then we have awards. So there's long day.
Super, okay. So we'll try and, save some time from the session then. So, okay. I think if I were to give you a perspective, I think there are very few industries that you will see that are very large in size on one side and that are growing at double digits, right? I think that's quite unique. Insurance falls in that. I feel that, as investors, we have seen waves of NBFCs, HFCs, and banking and financial services play out over the last decade or so well for us, simply because of the size of the market and opportunity set. I feel that insurance provides a similar opportunity set, in that. And hence the potential is large. The question really is, how do you find those opportunities? Because there are some roadblocks as well in the investment process and time horizons. I think I don't want to steal the thunder of the session, but I think that is probably the pluses and minuses that I see. The potential is very large, so I'll probably stop here, and then we can debate and discuss many other things. So
no, I think it's very complicated, right? One side the opportunity is there, and then the blockages are too many, and I think that's what your capital will help, right? Honestly, the capital will help. So Sagar, your perspective on it, because you're sitting at a stage where you'll typically enter at Series A around that. So what do you see from an investor perspective?
I think, good evening, everyone. To what Mahesh said, right, I think the space is very, very large, right? We can divide this into two buckets. I think we briefly spoke about it as well. Manufacturing piece and the distribution piece, right? I think manufacturing, interestingly, there are neo manufacturers in the country and there are licensed manufacturers in the country, right? So if you have to really pick and choose as a fund manager, it's your call whether you want to play the regulated play or the non-regulated play. And within the distribution also, you've got multiple lines of distribution, starting from agent-led model, policy bazaar model, right, bank-led model, or embedded finance model. So I think across the 6 or 7 buckets, 2 or 3 on the manufacturing side and 4 or 5 on the distribution side, each of the segments you have the potential to create billion-dollar companies out there and $100 million revenue companies. Now the question is that can you create 8, 10 of them is a question that we are also asking, that can you create 4, 5? Yes. Can you create 8, 10 of them, right? If that's the segment we want to play into. That's the larger opportunity we want to play into. But as Mahesh said, longer conversation. So I think I'll just give you a high level in terms of how we see the space.
No, thank you. And you're sitting, Rajesh, at the early stage, right? So how are you evaluating? Because once you fund, that company will move to the next and the next, right? So you are the genesis of the whole problem. Let me put it like that. Put more money.
The problem is here. This is the solution. They are trying to solve the problem. We are just backriding, on their journey. But see, my purpose to being here is to understand what they want, because whatever companies we invest in, we got to hand it over to them. I think the way we look at insurance at an early stage is slightly different than later stage folks, and it's by definition has to be different. First of all, we do early stage, so therefore smaller checks, and that's why manufacturing is out. I think that whole bucket that you referred to is just not our bucket. We are more focused on 2 different sides to the story. One is distribution. Again, distribution, you hear so many distributors, so many new licenses, so many people in the market. But do we all know in this room what is the penetration of insurance in the country? It's still single digits, low single digits. So long way to go. So distribution is one of the focus areas, and the other one that we look at is technology. More and more, like you rightly said, you have a choice as a founder, and we'll wait to hear from you, of whether you want to go down the regulated path or the unregulated path. I think whichever path you take, technology has to be the backbone, and that's where our capital goes in and supports.
Excellent. I think the problem is with you, right? I agreed. So maybe what are the segments where the founders should get in at this stage? And one of the predictions I've made is that at least two InsurTechs, which is tech-focused insurance firms, will become unicorns because the opportunity is huge. There is no back-end system which works really well. So there's opportunity for us to build. So what do you say, given that you have gone through this journey as well?
So I think very interestingly, my take on this topic and why I was excited about this session is, from this entire value chain, the way it is growing, I'm the last guy because I have invested
I'm also
as
there.
an angel
Allow
investor.
me to make money, right?
So I've been a very active angel investor, and then my first, angel investing, we put a, I don't want to disclose the name of the company, but that was an InsurTech company. And being a banker, career banker, and having handled almost all, insurance relationships, I think one thing which was always missing from the banker's lens was the tech aspect of it. Not that insurance companies did not have the right amount of, tech talent or the tech leadership, but probably the infrastructure itself was missing. And if you would have looked at the difference between Indian payment ecosystem and the ecosystem outside the world, what's differentiating us versus others is the foundational layer or the protocol layer of the UPI or NASH or anything what we've done. So when I was looking at building Transbank, my thesis was, can I democratize the transaction banking, which is of course a different topic altogether. But then I looked at some of these companies, especially on the insurance side, and there were 2 or 3 problems. And predominantly when I had looked at this space, I had seen almost 1.5 lakh crore of lending book on LIC of India. So, and by the way, when I have a problem, at least in my family, the first and the last option is to take loan against insurance policies, right? And LIC has perfected that space very well. So we looked at that company, and it was a superb thing. But the problem what they were not able to solve is, can I, have a direct or real-time access of the insurance policy, and can I lien mark, right? So there were 2 problems. One is access. Second is, can I transact on that, right? So that's where probably we thought the way payments or business payment ecosystem we are building, can we support, and then there are some use cases we're trying to support in the last few days, and that's why we really looked at beyond lending infra to insure infra. So I think this space probably is very, very hot, I would say, for you also and for you also. And today we saw some good innovations in this event, thanks to Samir. So look forward to exciting world.
I think that is a thesis we have, that this ecosystem needs acceleration, and we need, in fact, one of the questions I was getting asked, you have more investors here than normally. Idea was that if investors can invest only, then you will have the next ecosystem coming up. So I think, and they have a lot of money as well, so don't worry. I think from Mahesh, from your perspective, and the team is really efficient. They did one round in maybe 8-9 minutes. This is efficient, right? Mahesh, from your perspective, maybe maybe I'm literally asking your IP. What is your current investment thesis? What are you looking at in the market? And if somebody has to pitch back, I saw the founder pitching to him, and he was checking all his points, right? So it'll be good for me to understand what is your thesis right now.
Yeah, okay. So I think that one thing that I forgot to mention when I started the panel discussion was that the profit pools in insurance are far, far bigger than banking. Okay, so that's quite an interesting one when you look at it on an overall basis, but it is concentrated, in a few. What that really tells you is the enormity of the opportunity in front of you, which is also equally difficult to break in, because that means that there are very large entrenched players that have done this over long periods of time. So I think that's one thing that you have to bear in mind. As we look at investing, like Samir said, I think we sort of come in maybe Series B plus as an investor. So what that really means is we look for clear path to profitability. That's a little more difficult on the manufacturing side. But I think on the distribution side, we'll definitely look for, sharper unit economics and, how well that distribution sort of emerges and the depth of that distribution. Where is the long tail? How does that play out? Questions such as those. Distribution can be very, very valuable if you build it well, because I think while you've had this, banker and agency model that has, have their own waves, I feel that if you get this right, you can create a lot of value. So that's an area of focus for us, which means insurance broking, whether it is digital or otherwise, niche ones. On the manufacturing side, well, profitability is still a concern because I think these companies take much longer to turn profitable. Globally, there have been models that have emerged where profitability has been hit much earlier, which means that you're looking at very niche products that you can do. Maybe focus on travel as a vertical, let's say, as just an example, right? Or maybe do events and, very, very specialized, insurance companies that can be built out. And, be open to looking at those simply because of the fact that the timelines for path to profitability is a much, much sharper. On the fintech side, we are looking, but I think we feel that there needs to be some more scale. We are not seeing enough scaled players, from our side. So we're looking to, the early stage guys to fund a little more so that, they can all grow. So yeah.
Maybe you start an early stage fund as well, right? And he's not willing to give me any money. I keep trying. So anyway, that's a jokes apart. Maybe Sagar, from your perspective, what's your investment thesis? Where are you hunting, and what are the things which, let's say, a lot of early stage founders are here, and some of them are in pre-series as well. So if they have to come to you, what is it that you are looking at? Maybe they will also get some guidance. कि investors सोचते कैसे हैं इस business के बारे में?
बहुत difficult है कि investors सोचते कैसे हैं, but I'll tell you the way I think most of us think about, right? The public markets are the holy grail for all of our answers, right? No matter what value you get or what scale you get, if you're listable, sustainable, growable business for a longer period of time in life, right? That's the business which will survive. Now, whether you're an early stage or an early growth or a growth stage company, doesn't matter. So we tell founders, think about financial services first and tech second. I know it's slightly more to what people want to do because we are in a regulated space, right? And financial services is a regulated business. So whether you're in insurance, banking, lending, beyond just software, you're working with regulated players. So if you're building sustainable businesses, show us the metrics, show us the thought process, show us the skill set, the team, the process, the compliance, the regulation. All of this needs to be thought through from day one perspective. Even you may not have money to hire those resources, but at least think about those things when you're building from a 10-year perspective. Because at the end of the day, we all have to give the company handover to public market guys, right? And they are ruthless people and they're not forgiving people, right? If your business is not necessarily doing in the right fashion, you will not get the valuation. So beyond just valuation, building a sustainable company is very important. Building the right team is very important. Raising the right amount of capital is very important. Sometimes we've seen people overcapitalize themselves, right? And then you end up splurging on hiring the wrong talent for whatever reason. It's just natural human nature as well. So right capital, if you're thinking about brand building, product distribution, think about products in a more longer term way, brand building in a longer term way, distribution in a longer term way. Build more moats around your business which are sustainable. What happens is that we see a lot of businesses which are built out but don't have the necessary moats to survive or sustain their market share, or even maintain their business currently, right? So then 3 years, 4 years down the line, it will get eroded at some point of time. There'll be cycles. People are not underwriting cycles, 3-year cycle, 5-year cycles. Those are things which are not under your control. So we look at a bunch of aspects, right? Obviously, it's a longer conversation, but bunch of aspects to think from how the business will look like 5 years down the line when I am exiting the business. Who's the buyer at that point of time? What do I need to build this company, or what we need to work with the founders to build from a 5-year standpoint, and then they will take it forward from there. So look at all those aspects simultaneously.
Thank you. Thank you. I think, Rajesh, you already invested in InsurTech and a couple of them. So what have you looked at in those companies, maybe if you would want to talk, because it's public domain? And if you are investing more, what are the areas you are really going deep in so that they can come and pitch? I have seen so many startups out there which are in early stage and not funded. So if they come to you, what will you fund for? And you can also say typical, a lot of time actually early stage guys get confused between PE, Series A and So which one to pitch also you can actually quickly explain. Sometimes they're just heading in the wrong direction. Nobody at this stage should chase the guys on the other side.
See, if you want to build a business in a very humble manner with small capital, etc., you come to us. If you think you can raise 10, 20, $50 million, please go there. But interestingly, so how many of us here are founders? Just founders, building something, build something, etc. Okay, the others are all investors or?
They're buyers.
All right. See, so I think, I'll echo most of what my panelists, co-panelists have mentioned. But there are, let's say, 3 things that we look at when we are evaluating any InsurTech business. The first thing is we are not biased, so we look across all businesses from one standpoint, and that is capital efficiency. And I keep belaboring this point, but it's so very important in a country like India. We still remain a country, Mumbai, Delhi, Bangalore, not India, it's a part of the country. But if you want to build a large, scalable, sustainably scalable insurance business in this country, you definitely have to be capital efficient. So that is the first thing that we look for. The second thing we look for when you're building an insurance business is experience. And there's no right or wrong here, by the way, but our approach is to look at founders with, a little bit of gray, some experience. When they say they want to build XYZ, they know what it really
Gray
means.
hair, remember, gray hair is useful now.
Gray hair, very useful, yeah. See, mine is all black, I've just colored it like this. No, it's extremely important because you're not only going to deal with a market that, like it was mentioned, is a very large, huge opportunity, but you're also dealing with a regulator. And, whether we like it or not, we are in a country where regulators and regulations are very fluid, and rightly so. That's of, the life cycle stage where we are. So if you haven't understood how regulators think, how regulators work, how, what you're trying to do, is it in the gray area or is it very clear? I think those are, very basic but extremely important aspects. So these are the 2, main factors that we look for. And the third one that, that I just want to add is, from a life cycle point of view, insurance and InsurTech has already seen a peak once. We had, hundreds of millions and billions of dollars coming in. We all saw that peak. Funding today is 70-75% lower than that number. So it's really, but I don't think it's a death knell. I don't think it's really bad news. I think it's great. The cycle is playing out. In my experience, and I have my team members here among the crowd, we've seen that a lot of these, we call them tourist founders, have gone away. But who remains now are actually the founders who understand insurance, who understand, first of all, by definition, insurance is a long-term play. It's not something where you come in, you'll create a business, you'll get your valuation, and then you'll go to Hawaii or wherever. It is a long-term game. So I think this is how essentially we look at when we meet entrepreneurs and founders.
Thank you, Rajesh. And Weber, from your perspective, in this environment where getting funds are tough and engaging with investors is tough, should, and we are going off script, okay? I want to understand from a founder's perspective, what should they think and how should they approach the investor in this stage? And what is the expectation they have so that you can actually fulfill? You have done it thrice, just will be good for people to understand how.
No, I think most probably, I think we all, all the founders, maybe because we came from the banking background and also not from Bangalore ecosystem, we never thought of throwing money at the problem, right? So I think initially we built it bootstrap, we went to a good revenue in your one of the first event when we had done a very good 3 crore angel money round with one of the VCs and VC. So I thought, oh man, great, man, life mein aaj kuch achieve kiya, I met a VC, right? So most of the founders are that way. And no matter how much exposure this GFF and BFS is bringing to the ecosystem, and because we interact with hundreds of founders, because there are clients or sometimes I interact with them, in all these events and all, they still have some kind of there's some kind of an invisible wall between founders and investors. And I would have by now met 70-75 large investor groups. I think these are great people. We don't need to be afraid of them. I mean, and I don't know who is spreading that rumor to the founders world that boss ये VC आ जाएंगे तो आपके सर पे बैठ जाएंगे, आपका kidney लेके जाएंगे, आपका liver लेके जाएंगे. It doesn't happen that way. They are normal human people like us. Probably they are far more, affectionate, compassionate. They want to build, they want to help the ecosystem to grow, and of course they want to make their carry. So they wouldn't really want you to go down at any point of time. So please don't have that feeling. And I don't know who is misguiding the ecosystem, so don't do that.
You are promoting 3 of your investors, I guess.
Of course. No, I mean, most of them it's not about my seed or series A investor or series B. Most of the people I've met them are great people, right? So first of all, don't have that notion. Please feel free. I'll tell you, most of the founders come to me and say, boss, मुझे VC को pitch नहीं करना because VC ना मेरा idea लेके चला जाएगा और ना दूसरे उसके portfolio company का. It doesn't happen like that because at the end of the day, they don't also want to, let's say, confuse their existing portfolio founder with your idea, right? So don't have that fear in their mind. Businesses are not made in these great ideas. It's all about execution and the kind of ecosystem what you get. So I think that's one thing which is still a problem, big problem. And I don't know why it is increasing. I don't know what you guys are feeling, but I have seen a lot of people approaching me and saying, boss, can you just put me to some large angels, family offices? We don't want to raise from VCs. And then I'll genuinely ask them, what's the problem? And they'll say, no, unke upar sing hote hain. No, boss, they are good people. So just stay away from that concept. And be humble. A lot of people have that particular attitude. हमने ये बना लिया, हमने वो बना लिया. But there is Mr. Mukesh Ambani who's still working till 2 a.m. in the night and still putting so much of effort at this age, right? So we have to be humble. I think that's one thing which people still forget when they build for 3 years, 4 years. Our team, of course, most of us, we travel by local train and we are happy about it. And now more and more founders are, putting that train to their team. And to the social media also now. So we're very happy about, bringing the capital efficient and humble business. And of course, in that way, if you get good capital, good people who can help to promote your business, please go for it.
I'll just add a point to what was said.
मुझे suddenly seeing देखने लग गए.
नहीं, मैं बताता हूँ आपको. I think people have to realize that he, myself and Mahesh, all of us are founders first because हम भी धंधा चला रहे हैं, right? Investors तो हम हैं ही, but first thing we are running our own companies, our own P&L. So we have to justify our 10-year journey, right? So we are not capital providers for the sake of capital providers. We think about our business also in the same fashion like you think about your business. So please, we're not different from you as much because we are as sympathetic and as compassionate as anybody else. We have to be careful about what we are doing in life because we won't get second chances like you won't get second chances, right? So we are as founders as anybody else can get.
Thank you. So I think it'll be good for us to have some questions from the group here. If any of the founders would want to ask any question. I have a series of questions left, but it'll be good to have questions, and they're extremely time efficient. They did 2 rounds in 23 minutes. Anybody has a question out here? Yeah.
I just wanted to understand with the AI coming in, and I believe you would be using AI. Does the AI bring any change in the way that you now look at your investment, and is there any other point of view or change in your investment strategy? How do you leverage AI to, now look at which companies to invest or which ideas to back?
I'll talk about the early stage and then, so I think AI is not coming, it's come. It's here, right? It's like any new technology that comes up when we are investing in any business, in any vertical. It's not just insurance, it can be any other sector as well. The latest in technology has to be integrated into that business model. How it happens, how efficient it is, depends on what stage the business is at, what business it is in the first place. But AI is like any other technology, so we are not treating it as something, a very special case. I think it's a disruptor in its own right. It's changed the way businesses will now look at growth and look at technology as a backbone to that growth. And I think as investors, it is being shoved upon us. We don't have an option. We have to understand what it is, how it can impact, good, bad, ugly, all of that. I mean, just some statistics, out of every 100 decks that we see, at Equanimity, I think 98 of them will have AI mentioned somewhere, at least, if not 100. वो एक दो भूल गए होंगे या पुराना version भेज दिया होगा, नहीं तो 100 के 100 में होगा. But that makes our job a little more difficult because now it's not only for us to understand how that technology is going to be used in that business case, but exactly how does the founder think of it? How is the founder able to integrate that into the business model? So it's embedded, it's there.
Yeah, I think very agree with the thought process. What we are also noticing is that if AI is real, right, and you're using it, right, then there should be cost benefit or the revenue benefit, right? Either has to be visible on numbers. I always tell people if you're using technology, show me the result on the numbers, right? Because technology without numbers is just cost for you. So if wherever you're implementing AI, whether you're implementing ML models, whether you're implementing large language models, there has to be either a cost saving somewhere to replace that argument or a revenue benefit to you, whether customer satisfaction scores are better, customer communication is better, number of tickets are lesser, right? Wherever you're using it, number of people are lesser, workflows are automated, somewhere it has to show. So that's the only question that we want to always ask, that whatever you're using, show us the quantitative aspect of that outcome. I tell my existing portfolio companies also that all that you're spending on tech, show us the result every quarter. What is the cost benefit or the revenue benefit? So that's what the incremental additional factor we are doing, at least in our thought process.
I think, like Rajesh, and Sagar said, I think it's a given. We have to weave, technology, AI into the operations. One of the things that I mentioned at the beginning of this conversation is the sector is large and profit pools are concentrated with people. What that has done actually is to make the industry inefficient, because capital and the time taken to achieve profitability in the insurance has meant that people who are in leadership positions in the companies today, at least in the manufacturing and not so much in distribution, have all become very, I'd say on a relative basis, a little more lax, presenting big opportunities, which means that processes are manual, they are old, and that is probably a great opportunity for InsurTechs and incumbents coming into the sector, right? So that's one way of breaking the whole thing. You take a look at claims today, underwriting, so much of it is manual, and I don't see any reason why that should be the case. I'm sure each of us have experiences getting out of the hospital. It takes 5 hours to get out of a hospital today, right? Why? Because discharge takes so long. I don't see any reason why it should.
There is no integration where we are talking about AI.
Yeah. So a lot of that can be, you leave AI for a minute, actually can even be automated. You leave alone. So I feel that there's a lot that can be done, in the insurance space, given the size and the size of the profit pool that's there. But if you cannot, and in distribution today is expensive. Building distribution is very, very expensive. And if that's because of acquisition, and all of that. And if you can do that a little more efficiently using technology, I think you have a very valuable opportunity. Now, whether that is AI or automation, that really depends on where you are in the life cycle and that opportunity. But claims and underwriting are clear cases of AI, in my view.
But just one thing,
I think
how are you using the AI?
Hold. I think we'll give opportunity to one more person, gentlemen. Anybody has any?
Sorry, I'll just answer that. We are firstly worried about our own jobs, okay? Because I think, everybody now puts the, information memorandum to ChatGPT, Perplexity, and ask them whether this is an investable one. So I think we ourselves need to, upgrade ourselves, right? So I think that's a challenge that we ourselves are facing. And it's not far that you will suddenly, have lesser number of people in private equity and venture firms because there's only 1 or 2 people and the others are all done by AI. So,
yeah.
I think Mahesh is right. I was talking to a fund
You
manager.
got your questions responded, okay?
I was talking to a fund manager, and they have a team of 3 engineers in-house. The fund manager who's building the whole tech solution for the fund manager. Forget about the companies, right? And I was just having a chat with him. He's like, our memos are 1 day now. It's not even take more than 1 day to prepare memos. And all the research that the team does, market data analytics, TAM and all of that, is less than 1 hour's job. And I'm like, you send those 3 engineers to us, boss. It'll save a lot of time for us as well. So it's actually real for all practical purposes. on the what people are using as well.
Hi, this is Rajesh. I have two questions. One, during
only one नहीं तो शाम को वाले हमें डंडे पड़ेंगे.
I'll try to make it as simple as possible so that they don't take time to answer. Morning, there was talk about composite licenses. How does that make the opportunity in distribution a little more exciting, and what's a view you have? And second was, you said it is regulated industry, so any startup, whether technical or domain specific, needs to have a domain person or founder needs to be domain. How gray is that? Is absolute 0-1, or a technical guy can understand the domain and still be relevant for you?
I'll take the second one. It's more interesting. And I've always maintained this stance. It's got nothing to do with what's happening in insurance or InsurTech now. You look at the broader fintech umbrella. It's fin first and tech later, right? So it's always going to be domain from our point of view. Again, there's no right or wrong, but it's domain, domain, domain. Tech is great. Tech is an enabler with AI coming in and other new technologies we've seen over the years and decades. They're all enablers. They are not business by themselves. So you will, and especially in regulated, the other point, the first one I'll let others answer, but it's a regulated market, it's a regulated industry. If you don't know how, so there are clear boundaries, right? And unless you're a player that wants to play in the gray zone and all that, and there are all kinds of people out there, then that's a different conversation. But if you are, want to be within the confines of regulations, I think you have to come from the domain, and you have to, unfortunately for you, understand technology. Okay. But if you're technology and you're starting to understand insurance today, all the best.
So I think it's an interesting thought. I think if maybe 5 to 10 years back, a young kid will come and start the business and then get funded. Even in the lending side, we saw the early stage like that and all. I think all the easy areas are gone, right? So the areas where you have to solve are much tougher, and it will take some experience from inside to build it, right? I think that's the theory, which is the gray theory, right? You are talking about gray here to solve for it. And it's tough, right? I think some of them will have to have more patience as well, right? I mean, these are some of those products which you will build. We at least a 5 to 10 year journey. And anybody's looking at, I still meet people, I met a guy who says, "Mujhe jaldi fund karke bada karna." There's hardly anything in insurance you can actually do it. And I don't think in this industry, nobody has been able to do a 2-year journey and exit it. No, nothing like that. So with this, I pause. I think, thank you guys. You have given us 2 minutes back to us. But the pace at which you responded was amazing. And half the time you're responding to this gentleman, okay? So thank you. This is good. Thank you. Thank you.
Thanks.